Palantir. Massive change in Palantir's business model. I want to talk about this a moment. Somebody sent me this from Coach Strap, sent this out. He believes this is a huge deal. He's been talking about this for quite some time. So we need to discuss that for a moment. Then I want to go ahead and react to this video from Amit here that he posted yesterday on kind of his take on earnings. And I want to kind of react to that, kind of share my perspective if I agree with a lot of his sentiments. So just a Palantir focused video for Palantir shareholders out there. Hope you guys enjoy this one. Appreciate y'all joining me. All I ask in return, smash that like button. And make sure you're subscribed to the channel. Appreciate y'all. I put together a brand new workshop for you guys. I'll be pinned comment down there. 7 steps to 7 figures in stocks. Goes over very, in depth in regards to these steps and what you need to do to reach that. Okay. So Coach Strap, he, I don't know if they still call it tweeting or now they just call it posting on X. But this was sent over to me, and he posted, how many new customers do you think Palantir added Tuesday? I'm betting close to 500 in a few hours. That would be insane, because it's not like Palantir has customer base of tens of thousands of clients or something like that. So 500 would be an insane number, if that's even remotely accurate. Everyone who registered provided a credit card and valid ID. Judging by the number of people messaging me, the demand is massive. And YouTuber silent, right? And a good call out by Coach Strap there. He's been talking about this. I think the first time I ever heard him speak about this, it might have been 2022. And I remember him talking about Palantir should open up their business model more, let developers play around with Palantir sophomores more often. And because there's a lot of developers who don't want to maybe go through the whole boot camp process or talk to sales folks and things like that. And so he brought this out as a point a long time ago. And we'll see. This could be a monumental change in the business model moving forward for Palantir. We could see Palantir's customer count and revenue climb substantially from here. So, it's one of those things, you don't want to get too excited about it. Let's not go too crazy with this, right? But this could be a major shift in the business model. And remember, even if this added, let's say, an extra 4 percentage points of revenue a quarter, that would take Palantir from, let's say, this past quarter, they grew 21% revenue to then growing 25 percentage points, right? Doesn't sound like a crazy number, but that's huge. What that does for Palantir, it's very important everybody understands, what this then does for Palantir's bottom line financials is a game changer long term. It's not like, it's just an extra 4 percentage points of revenue, just throwing numbers out there, right? It's way more than that, because Palantir is going to be able to grow their bottom line at a much more rapid clip than their top line over the next 5-10 years, in my personal opinion. So every extra percentage point of revenue they get is probably 2 to 4 percentage points of earnings per share growth, okay? That's very important to understand that. Now, let's go ahead and react to Amit's video and his take on the earnings, and I want to kind of share my opinions and perspectives here.
The perspective that I have on how this stock is down 15%, but it makes little sense to me, although it actually makes a lot of sense to me given the macro and some of the price action we've seen. But on a sort of sell the stock because the bad numbers are there narrative that I guess some of the bears are trying to make an argument for, which there's not that many bears making that argument institutionally. I don't think that narrative makes a lot of sense. So let's get into it. Before we get into the numbers, here's what I want to show that I just tweeted an hour ago. So this is what we got from Tyler Radke. If you guys know this guy, he used to have like a $10 price target on Palantir, and he really did not like the company. I mean, he really thought...
By the way, shout out to Amit. He got to meet Karp recently, and I think Karp even fondled his hair a little bit, I believe.
SPAC revenue awesome. And the way they're going to market. He was not a fan of the company, analyst from Citi. He hated us a year ago. He upgraded the stock today to $25. The stock, I think he raised it to 23 a day before earnings, from 22 to 23, so not the biggest upgrade, but the fact that he even initiated an upgrade on that was really interesting. And I said, given the stock action down 15%, you'd think we would see downgrades across the board. But it seems like the market, stock being down 15%, is actually detached from how the analysts are seeing it. The analysts saw a great quarter, and I'm going to talk about some analysts that have historically been bullish, but Tyler Radke has not historically been bullish. So this really shocked me when he upgraded Palantir to $25 after the earnings that we had. Bank of America.
So some of these folks that are flipping over the bullish side in Palantir, I'll defend them for a moment. Okay? Listen, Palantir, if we go back 2 years ago or so, 2-3 years ago, it was much more of you had to really be down the Palantir rabbit hole to really believe in Palantir at that particular time. You go back 2 years ago, the financials are not in a good place. I think we all know that, right? 2-3 years ago, it was messy financials. there was massive deceleration in the business model going on back in 2022. And it was, it was the bleakest days since Palantir had went public by far. And so, some of these folks that are flipping on the bullish side to defend them for a moment, I understand why they were bearish back then, right? Because it was dark days, and especially the sentiment around the market back in 22, which was very negative in general as well. So, Palantir is a very different company now. I will say that here in 2024.
$28 buy. We'll talk about Mariana's Bank of America research report in a second. Wedbush, Dan Ives, $35 buy. Even Rishi, I'm going to do a separate video over the weekend reacting to Rishi's 5-minute interesting comments around how he thought about Palantir's quarter. He upgraded the stock from $5 to $9. He still has a sell rating, but he had to realize, okay, $5 is a bit ridiculous now. So it seems like the analysts did not feel this quarter was bad at all.
By the way, that 5 to 9 is a crazy one. You know why? That's 80% up? That's raising your price target 80 percentage points. That's insane. So although is a man still insanely bearish with $9, yes, but to raise your price target 80 percentage points is wild.
It was just doing market things. If we look at markets, or we look at Palantir stock right now, Palantir right here, 21.45. I did buy 25 shares today at 21.35. I bought 25 shares.
And by the way, what do I think about these single-digit price targets? Listen, guys, it's just foolishness. If Palantir's balance sheet was complete crap and their business model had no growth, okay, go slap your $9 price target on it. Palantir's got 20% plus revenue growth. Their earnings per share is increasing rapidly. Their operating income's increasing rapidly. Their customer count is about to go through a whole new growth stratosphere now at this point in time. They're kind of one of the center of the universe companies when it comes to artificial intelligence. Come on, man. Come on. Throwing a single digit on Palantir is utterly ridiculous. If somebody wants to throw a $15 price target on and say, you know what, I think the forward P should be more around here and the trailing 12-month P is a little too high. Okay, single digits that's silly talk.
2161, so I've been buying the dip below 22. It's basically flat on the day, but it has fallen 15%. The market is, hurting Palantir, punishing Palantir. And the analysts are actually, we think this is a really good quarter. So how do we make sense of this? How do we make sense of the fact that the market has hurt Palantir? Analysts have not felt the same thing. I mean, we're not seeing downgrades, sell ratings, get the stock below to $20. It's no, everyone basically on the street has a price target from now. I mean, there's some that still have a $12, $15 price target, but most analysts have it from 18 to 6 is the median, and I think the median between that is 22. And then you got Dan Ives up there with 35 and Mariana at 28. Okay, so overall thoughts on the quarter. I thought the quarter was exceptional, and I say that trying to be as objective as possible. I went through the numbers 3 times over the past 48 hours, looked through the deck, and we're going to go through the deck a little bit right now, and I'm looking for the number that I don't like objectively. And I've covered Palantir long enough. I was there when it was when adjusted operating margins went to 17% in August of 2022. That was Q3 when Carp said they're not going to be profitable on a GAAP basis until 2025. I was there on those days, and I critiqued the company. You can watch all those videos. It's documented on the channel during that time, right? Because that was a bad quarter. They had a bad quarter. You have to say that they had a bad quarter. So I feel like I'm pretty objective here. And objectively speaking, I do not think this was a bad quarter by any sense of the imagination. In fact, I think they absolutely, I agree with Carp, they crushed. I think they crushed this quarter. So let's go into the numbers, and then we'll talk about kind of why I think the stock reacted the way it did. But I want to touch a little bit.
Okay, to push back against Amit here a little bit, I wouldn't say Palantir crushed this quarter. They reported a very good quarter, borderline great quarter. But when I think about a company crushing in earnings, I think about they just knocked it out of the ballpark. They blew away revenue expectations, earnings per share expectations. Listen, adjusted EPS came in line. Revenue beat a little bit. Revenue guide for next quarter was $8 million higher at the midpoint. Nothing too crazy. So it was a very good quarter for Palantir. And I graded their income statement. I think I gave them, I'd have to look here, maybe a B plus or an A minus, something like that. Very, very good quarter from Palantir. Extremely good. But I wouldn't say they necessarily crushed it. That if they reported 25% revenue growth, 27%, 30%, then we was oh yeah, they crushed it. But 21%, that's good. That's really good.
On these numbers, let's just make my box a little smaller here. Round about here. Okay, cool. So these are the overall numbers that we're looking at. I want to take it slide by slide, but GAAP net income, profitable. That's amazing. We're still profitable. Operating income, $80 million, which is amazing. That's up 13% quarter over quarter, which was amazing. 13% year over year, which again, the company is profitable. This is their 6th consecutive quarter.
Palantir, I graded their income statement. It was a grade A income statement. Very, very impressive overall, right? But once again, there's a difference between very impressive grade A, and crushed. Crushed is A+. That's like blew numbers out of the water. People are just in shock. Like, I can't believe the company put up these numbers.
Profitability, I think that's a very, very big deal. Commercial revenue growth, 27%. That had a slight decline from 30%, but that is only, in my opinion, from how I'm reading the slides, because international commercial is not growing as fast as US commercial. That is not seem to say there's a deacceleration of commercial. That seems to say, okay, one part of commercial is not growing that high, but the other part of commercial is growing leaps and bounds. As you can see right here, 40% US commercial revenue growth. This is what Palantir guided for, and they raised the guidance for the next quarter. They're saying, hey, US commercial is going so well, we're not just going to do 40%, we're going to do 45%, which was another big deal on earnings.
Oh, and the great word choice was, if I recall, they said at least 45%, which is even more compelling. That means like 45 is in the bag. Like maybe we do 48, 52, something like that, right?
That I think is important. You had analysts like Rishi say, oh, well, wait a second. They went from 70% to 40% growth, so US commercial is deaccelerating. And in reality, that's absolutely insane, because the company said, hey, we did 70% last quarter. They're building off a very small base, so it's easy to do 70%. Next quarter, we're going to do 40%. 40% commercial revenue growth is still phenomenal. It's just not 70%, but like you can't keep up those numbers in perpetuity. So I think some of the analysts that were bearish on that, it's like, well, if you listen to management, you would see a different story. And they're raising that guidance to 45%. Then you got US government and overall government revenue growth. This doesn't get talked about enough. This re-accelerated. Last quarter, this 16% was 11%, and this US government revenue growth was 6%. It became 12%. So the majority of the US government revenue growth fueled the overall government revenue growth, $335 million from the government sector this quarter. But I think that's a big deal, because if that reacceleration can continue and that 16 becomes 17, 18, 19, then you got a commercial business that's catering at 21% year over year. We beat expectations on the overall revenue. Or you have an overall business catering at 21% year over year. You have a commercial business in the US catering by 45% year over year. You have a general commercial business catering by 27% year over year. If government revenue starts to cater at 18, 19, 20% by the end of this year or early next year, I think you will have top line revenue growth of closer to 25, dare I say even 27%.
Boom, 100%. Very important. Everybody understands that. The government's the one thing holding us back. It is holding us back right now. If we can get that together, because the thing is very important, everybody understands about Palantir, right? Everybody knows they got the two segments. They got government, they got commercial. But the very important thing everybody understands about these growth rates and why government matters so much is the government business today is still significantly larger than the commercial business. So even if the commercial business is growing at a very rapid clip, it's still a much smaller number, overall total number, because the government numbers are so large. So that's just very important. Everybody understands that.
Very possible. So this is one thing to keep our eyes on. And if there's more contracts like Titan that are down the pipeline, Palantir should be a benefit of it. Now, here, total revenue growth. So this is what I was talking about. We beat revenue expectations from 615 to 634, so about a $19 million beat. Total revenue grew 21% year over year and 4% quarter over quarter. No one can say Palantir does not grow at least 20% year over year anymore. In fact, we grow above 20%. Now, look, it's a small 21%. You got to take it by baby steps, but we're there and we're growing. It's not that easy, dude, for a software company to compound 20% year over year, but Palantir is doing it, and they are doing it profitably, which is an incredibly important thing. If we were not profitable right now, I don't think the street would be as excited for the company, because interest rates are the highest they've ever been in 40 years. But we're doing this while remaining profitable, which goes further to explain that this AI narrative Karp's talking about, it's real and it's happening right now. And I think we have to understand that if that's what we're seeing in the context of the actual company. So revenue is above 20% year over year. AIP, I mean, this slide right here was the most underrated slide in my opinion. Adjusted operating income margins, 226 million. 36%. In my DCF model, my super bull case,
I'm not the biggest fan of adjusted numbers, but
it's 36% exactly adjusted operating income margins. I also have growth of closer to 35%. So that's not a fully accurate picture of what the bull case is. But in my estimates, I was like, okay, if they can get adjusted operating margins to 36% over the next 10 years, it goes out till 2035, and top line growth obviously like 35%. This is closer to a half a trillion. $750 billion company. Now, again, top line revenue growth is much more important to be able to get that. You have to really compound, not easy to do. But one of the things you've got to do while you're compounding that growth is make sure you can do it in a way that actually allows you to generate that income, which means your adjusted operating income margins have to go higher. This was 17% 18 months ago. Now it's 36%, more than doubled. It was 34% last quarter. It was 29% 2 quarters ago. I mean, if they can get this thing to 40%, which I think it would be kind of unheard of, but if they figure out how to do that, then even if the growth is not that substantial, we are going to see the impact on the bottom line, on the earnings per share, and in regards to the net income, which is going to be beneficial for Palantir.
Do I think Palantir can get to, let's call it, the big numbers everybody talks about, like, a $500 billion company or something like that? Do I think they can get there with just their current product suite? And the answer is probably not. But the good thing is, over the coming years, Palantir is going to come out with more products and services, more upsells, more things to sell their clientele base, right? And be able to continue to expand that business. I doubt Palantir's launched their last product ever. I believe they'll have many new products and services and spin-offs of different products to address different markets over the coming years. And so That's kind of my belief. The current product set for Palantir can probably get the company to like a $200 billion market cap, or maybe even a 250. But to get to that $500 billion and above, we probably need future products and services. I'm sure Palantir is working on many things behind the scenes that we won't see till next year or the year after, right?
Well, all right, customer count. This was the big slide and big number that I think we need to care about. The boot camps are working. 155 to 262, year-over-year growth of 69%, quarter-over-quarter growth of 19%. We are killing it in U.S. commercial customer count. It shows you that AIP is actually scaling in the way that it needs to be scaled. Now, one thing I know some people had an issue with during the call, Dan Ives asked the question about what's the conversion on the customer count rate, and people were like, oh, they gave a dodgy answer. I don't think it was necessarily a dodgy answer. I think it was a strategic answer. So two things on this. Number one, they said, hey, if you look at our results, and then they just repeated a bunch of numbers in the slide, the argument is that the byproduct of our bootcamp scaling is that we're converting a ton of customers. Now, they didn't say 10%, 20%, 30%, 40%, because honestly, as a shareholder, I'm happy they didn't say that. If they were to give you an objective number on, hey, we do XYZ bootcamps and we convert XYZ clients, then the analysts are going to start using those numbers to run all these crazy projections. You never know how analysts then think of how far that can go, how big that can scale. They put out these kind of ridiculous valuation models, and it doesn't make sense. As a company, that's proprietary data that I'd actually rather them keep to themselves, because once that number stabilizes, gets strong, remember bootcamps is only 12 months of a strategy that's started to take effect, so it's still in its infancy in terms of its scale, then I think you can give out some of that data. But right now, that would be kind of stupid. And also, you don't want Snowflake or Databricks or all these guys knowing how well you're converting off bootcamps, because they're scared shitless that bootcamps are actually working. So you should let it just keep working, and eventually you can get to that. But right now, I don't think there's a need to really say that number. So to me,
do I agree with Amit there? I would say yes. I fully agree with him, 100%.
I can understand how the perception was, oh, they're dodging the question. They definitely dodged it, right? They didn't want to say the exact number. But I think the reason behind why they dodged it makes a lot of sense as well.
Agreed.
So overall customer count, 42% year over year. I mean, sometimes it boggles my mind, dude. Palantir is a company that's going to do $2.7 billion in revenue off 554 customers. it just goes to show Snowflake's going to do, I think, like 2.9 billion off 8,000 customers. Different businesses, different sort of product suite in terms of the markets they're attacking. But just imagine, dude, if Palantir can actually scale. By the way, they did announce something at the expo that I'm at. I'll do a separate video on it because it deserves a separate video on how they're planning to go to small businesses. That whole AIP Now thing we talked about a few weeks ago, that's starting to really take into effect. In fact, I signed up for an account with my credit card. That's been kind of meme, right? Can I sign up for Palantir with my credit card? I did that yesterday. So that's starting to get closer than we think. They're doing, imagine Palantir had 8,000 customers, right? Imagine if they could get to the point where they're adding thousands of customers every year. Right now, they're adding, hundreds. And so this quarter, we added 57. I think it was very good, up 42% year over year from 391 to 5.
Do I believe Palantir will be able to scale to thousands of customers, 5,000 customers, 10,000 customers? The answer is yes, I do believe they're going to be able to do that. I don't think it's going to happen in the short term, but I do think it's going to happen over the next 5-10 years. Absolutely. I see no reason why not. No reason why not. Right now, and when I say right now, I mean over the past few years and really like this year as well, they're really still focused on big dogs, right? They're focused on customers that they can sign up, and those customers are going to be able to spend $10 million a year with Palantir, $5 million a year, $20 million a year, $40 million a year. They're still focused on those customers. And remember, there's only so many of those massive companies out there, right, that are going to spend millions and millions of dollars with a product like Palantir. So I think they're really focused on those guys still. But as a company gets bigger and larger, and as their product can be experienced by smaller businesses, smaller companies, startups, those sorts of things, that's where the real magic happens in terms of adding up thousands and thousands and thousands of customers over time. So there's no doubt in my mind Palantir will get there long term. No doubt in my mind at all.
Before. And the NVIDIA quarter of adding a couple hundred customers isn't here yet. When that quarter comes, it is going to be insane for the company, the trajectory of their growth, and we're going to see it reflect in terms of how the stock will move, how analysts will project the revenues. The level of interest that's in this company is already, at sky high levels. They just need those customer count numbers to go a bit higher for the street to really get excited. But so far, so good at 42% year over year, and then commercial customer count at 53% year over year. I thought that was good as well. Closed 87 deals of at least 1 million, 27 were 5 million, 15 were 10 million, 3.9 billion in cash. This is up $200 million. This money is going to be pretty.
If you're wondering how does the stock get to, let's say, how does the stock all of a sudden, burst to $40, $50 a share? I think there's two ways Palantir, and when I say that, I'm talking over the next year. Like, let's say Palantir went on a run. Next thing you know, the stock is $40, $45, $50, $55. What would Palantir have to do that in the next year? One of two ways they can get there, okay? And both these would happen simultaneously. If the company gets back to 30% plus revenue growth for whatever reason, right, that would cause the stock to just go absolutely insane. Because then the stock used to be valued at a very different place when they were doing 30% plus growth. But that was back before all the AI excitement and business model being in a much better place and before the company was profitable. So I'm telling you, like nowadays, if all of a sudden Palantir came out and they're like, oh yeah, we're growing revenue 33%, something like that. Oh my gosh, 40 plus coming. The other situation that could transpire is a situation where customer count just goes absolutely insane. Let's say they add an additional 60% customers or something. Like, let's say this whole new model of, letting people experiment with credit cards and an ID and those sorts of things. Let's say that goes viral and just takes off inside the business community, the startup community and things like that. That's another thing that everybody would flip out, because it's like, oh my gosh, they're like attracting massive amounts of customers. Like if all of a sudden, next quarter, their customer count's up like 55% or 65% or something like that, everybody's going to flip their flapjacks, man. Everybody's going to absolutely flip out in regards to that. And that gets back to CodeStrap. He's talking about 500 folks. I mean, yeah, if these numbers are right and there's actually that many folks experience this product all of a sudden, yeah, that's another thing that could cause the stock to just go absolutely insane.
Net income for them as they put into T-bonds and get short-term 5.5% off that cash. Revenue of 2024, they expect 649 to 653 million, which is not horrible. I'm pretty sure they're going to beat on this. This is what Palantir tends to do. They under-deliver and then they beat, or they under-promise, over-deliver. So we'll see how that plays out. And then full year revenue.
Got to learn the hard way on that, because they used to over-promise, under-deliver, and then they got absolutely wrecked.
It slightly, 2.67 to 2.689.
Play the game of Wall
US commercial
Street.
revenue of 661, that represents 45% growth. Adjusted free cash flow, they kept that the same, and then adjusted income from operations, I think they kept
sandbag, in my opinion, sandbag.
Much the same, and they're going to be profitable for this.
We'll see.
So when I look at these numbers and I try to ask myself objectively, what is wrong? What is bad? Why should I sell my stock? Why should I be afraid of these numbers? Why does that signal fear in me? Why should I feel like, oh my goodness, this is not the company that I once invested in, that I should feel so scared? It's like none of those feelings are there. And I felt this when we were on the live stream, and shout out to anyone who joined the Palantir live stream on earnings. I'm looking at the numbers. I'm looking at the stock tank 10%, and I'm like, dude, these numbers. And then I'm looking at the analyst projections today. The analysts are like, yeah, we're upgrading the stock. And I'm just like, well, okay, so what's going on here? And I think the answer, objectively, it doesn't take a rocket scientist to figure this out, is that Palantir popped 10% before earnings, $25. And so when you pop to 25.36, I think it was at the peak, right before earnings, right now Palantir 21.35, very difficult to compound even higher. Just to give you some people context, Palantir year to date, right? Just give a
little. The number in my mind was for the Palantir to burst higher, and I shared this on the channel. My thought was if Palantir did 25% or above revenue growth, that was going to take Palantir to the next leg higher. And next thing you know, we would have seen $27, $29, something like that, maybe even 30 plus. But that was the number. That was kind of the number in the sand, in my opinion. Obviously, they didn't come in with that. They came in with 21% revenue growth.
The context is up right now, basically 30%. And when you have these types of numbers and you're up this much, it's hard to keep the compound. If we ended the year up 28%, it would be a successful year. We're only 5 months into the year. We got our pump very early. At one point, Palantir was up 50%. So to compound off of being up 30% year to date, and then to try to compound off of being up 10% in a day, I think it sets up for a really crappy stock action, even if the numbers do amazing. So I think they absolutely crushed. I think the numbers were phenomenal. I think they added a lot of depth in terms of how their bootcamp strategy is scaling and how that will result in customer count going higher, which increases top line revenue growth. I also think they're sandbagging. So Bank of America, speaking of sandbagging, they believe that they're absolutely sandbagging. So Bank of America's institutional notes to their clients for why the stock was down 10% on earnings. Let me share this right here. They said, we see it as likely management is taking a more cautious approach on outlook, given it's only the first quarter and still anticipate 25% year-over-year growth. So their argument is like, hey, investors are looking for a larger revenue outlook raise. They definitely wanted higher guidance. Palantir did not raise guidance dramatically. I think it's still only 21%. Investors want closer to 25%, and deservedly so, right? Palantir does have a premium attached to it. You should want higher growth, but you're not going to get that in Q1 guidance. You're going to get that later. And so if you're going to get that later, I just don't think it makes a lot of sense for the analysts to be all up in arms, and which they're not, but more so for the market to be all up in arms and get aggressive and sell the stock. Now, granted, the stock action to me is also not that big of a deal, because I'm like, well, we've been teetering around this 21 to 24 range for a while. Over the past couple of weeks, it's been more 21 to 23, and the couple of weeks before that, it was 23 to 25. So basically, let's just call 21 to 25. That's been the range, and we're stuck there. We're definitely not below the 20s, and unless the S&P collapses, market collapses, I don't think we get there again.
At the end of the day, and by the way, if you want to check out the rest of Mitch's video here, you can obviously go to his channel. But at the end of the day, for long-term investors, who cares? Who cares? Palantir 21, 20, 19, 25, 27, 29, 28, 25, 55 is all irrelevant. At the end of the day, the fundamentals are getting better and better and better for Palantir. and growth rates are picking up. Everything's going in the right direction for this company. That's what we love, folks. Pin comment down there. I got a brand new workshop for you guys I just recorded. This takes you through 7 steps to 7 figures plus in stocks. Each step you must take to reach these sorts of levels. Growth hacks I learned so you can scale faster, as well as how to implement these 7 steps. Free workshop for you. It's about a 30+ minute video that dives into those. Pin comment down there. Much love and have a great day.